please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello, good morning and welcome to Power Breakfast in the Mumbai News Center. I am Anisha Jain and with me is Mangalam Malu. Mangalam, good morning. Well, the SGX Nifty for starters is showing a 30-point uptick. Surprising because I thought crude might impact negatively the sentiments as well. I know you mentioned that usually crude is positive for the overall macroeconomy, but $70 a barrel may be a bit of worry.
69 to 70, I don't think it's just $1. I mean, tell you what, the kind of markets that there are right now, the Wall Street, Dow yesterday gained about 200 points. Yeah. At the same time, we are seeing big moves coming by on most of the markets in the first part of the result season. Right, first up, let's take a look at the Asian markets. Remember, we got a strong Q coming from the Wall Street. The Dow hit yet another record high with about 200 points on the upside. But we're seeing a mild bit of mixed sort of moves coming by in the Asian markets. The Nikkei, that one should come up for you, had been outperforming all of last week. And as we speak, currently down about 0.2%. No real change seen in the dollar yen. We got some macro data come by from Japan. The current account surplus was down 5.6%. Trade surplus was down 47%. So maybe that is weighing in on that index. If you look at the Korean markets, no real changes out there. Absolutely flat as far as the Kospi is concerned. But a mild green tick seen on both the Straits as well as the Taiwanese indices. Both of them should come up for you on your screen. What is actually heartening and positive is the SGX Nifty indicates a start on the front foot with a gain of almost 38 points. As we speak, 40 points, very close to that 10,700 mark. Remember, the Nifty futures premium is just about 3 points. So we could actually see a close towards that 10,700 mark. Yesterday, we retreated from 10,660. Let's see whether today we go ahead and breach that level and perhaps touch that 10,700 mark. If we don't, then maybe this rally would be sold into.
Okay, so 10,700 might be on the anvil, but the key headline actually coming from the US market where the equities posted fresh records on optimism in the global economy. The major three indices rebounded from losses posted in the previous session, with Dow rising over 200 points to end at record levels. CNBC's Hampton Pearson gets us a wrap of all the action on Wall Street.
U.S. stocks recovering from their first wobble of the new year, pushing back to record highs. Surging energy stocks leading the way. Oil hit its highest price since 2014. That helped drive the energy stocks in the S&P up to 2%, the largest among the 11 sectors that make up that index. Also gaining altitude in a different kind of way. We had Delta Airlines jumping nearly 6% after it reported stronger results for the last quarter than what analysts were expecting on the back of higher fares. The dollar held in the currency world at 111.10 versus the Japanese yen, while the euro rose to 120.39 from 119.57 late Wednesday. At the closing bell, markets finishing another day in record territory. The Dow up 205 points, the S&P up 19, the Nasdaq higher by 58. Late word coming in about chip maker AMD updating their processor security. The stock down 4% in after-hours trading on that news. Specifically, news from Microsoft saying that security updates froze some computers using chipsets from Intel and rival AMD. Another story overall creating lots of buzz on Thursday. Several reports that the file-sharing privately held company Dropbox has filed confidentiality papers for a possible initial public offering. According to those people familiar with the matter, of course, its private valuation, that of Dropbox, is at about $10 billion. No comment from Dropbox and its financial representatives at Goldman Sachs and JP Morgan. As of last August, that San Francisco-based firm had some 500 million users and 200,000 businesses.
Okay, and one of the focus areas for US is the impact of the tax bill. Global Chairman and CEO of EY, Mark Weinberger, is of the view that the new tax code will result in new investments into the US market.
Everyone's focusing on all the individual provisions, but the most remarkable thing about this tax reform is the first time in 30 years you have a restructuring of the business tax code. You have a dropping from the rate, the highest in the OECD, from 35 down to 21. You have a new system that will allow U.S. businesses to bring back capital without the 35% toll charge. You have massive new ability to expense investment, which will spur new investment in capital equipment. Those are the big issues. You also have middle income tax relief, very important for political political reasons and elsewhere. But the restructuring of the business code, everyone is focusing on what's going to happen next quarter. This is a long-term strategic shift, very unlike we've seen in a long time in the United States. Foreign companies now looking at investing in the United States, where they will now have a lower rate and be able to expense and get advantage of a more stable and lower tax system that didn't exist before. So on the margin, even foreign companies we're seeing, remember Foxconn last year was a big announcement, is moving the money into the United States.
All right, let's shift focus to the European markets then as we speak. The European markets in yesterday's trading session actually closed mostly lower, barring the British FTSE, which pared losses in late trade to end mildly in the green. In fact, ended at yet another record high out there. The CAC as well as the DAX were lower. The financials in the German index took that index lower. The retailers didn't do too well as well. We saw some cuts come by in Marks & Spencer, Tesco, as well as Danish jewelry maker Pandora. But on the data front, industrial production in the euro area jumped 1% in November. Across the periphery, we saw some good gains come by in the Greek index. The ATHEX should come up for you, gains of about 0.6%, and as well as the Italian index. Watch out for the emerging markets pack. Oil, remember, is at $70 per barrel, so the oil producers doing well. Russia up 1.14%. Brazilian index, that one was up 1.5%, indicating a bit of a risk on across the emerging market space itself. Remember, the Brazilian market's up 1.5% despite S&P's rate cut. S&P has cut Brazil's rating from BB negative to BB minus, saying that it had advanced more slowly than expected to strengthen the fiscal trajectory. However, the ratings agency has set a stable outlook on Brazil's rating. Maybe that's what investors took heart from, in that index higher by about 1.5%.
Okay, and in the currency space, the dollar index, which tracks the US currency against a basket of other major currencies, edged lower on back of weak factory inflation data, while euro strengthens after the European Central Bank hinted that it could be gearing up to trim its massive monetary stimulus.
In the world of commodities, oil prices ease from 3-year highs after Brent crude rockets to above $70 per barrel overnight.
And from the precious metal space, gold prices rise to trade near 4-month high levels after a hawkish tone in the minutes of a European Central Bank meeting pushed the euro sharply higher against the dollar. Well, back home on the last read, the bulls claw back in trade to erase early losses, helping markets to end at a fresh record high. A late recovery took the Sensex past the 34,500 mark and the Nifty to close within the striking distance of the 10,700 mark. Banks and mid-caps mirrored the benchmark indices, with the mid-cap index hitting another closing high. But in terms of the cues for the markets today, Mangalam is telling us all the cues that are lined up for trade. Mangalam.
Anisha, you said it, within kissing distance of 10,700 for the Nifty, 34,500 held for the Sensex, the mid-caps again at fresh record high. That tells you the texture of the market. We are at record highs. We end the day, go back and watch the television in the night. We see Wall Street, that one at record high as well. The Dow climbed 200 points after retreating one session ago. So, there is strong momentum. The global cues are strong. Dow rockets to record highs. Taking that rocket is actually Boeing, contributed most to its gains. And investors are now betting on US economic growth gathering steam. So that is a positive. If you take a look at the emerging market space as well, we saw all the indices, emerging markets indices doing well. And now the SGX Nifty indicates that maybe the first ball itself, we could go ahead and hit that 10,700 mark. Let's watch out for that. But what is concerning is that if investors are eyeing growth in the US markets, are they selling in the Indian markets? Because the FII selling has perhaps flattered to deceive in the first few trading sessions, and that selling has intensified over the last 3 trading sessions itself. From 300, it's gone up to 600 in yesterday's session. So if you take a look at the first 6 days of 2018, the FII has bought about 2,400 crores, and in the last 3 sessions itself, they went ahead and sold 1,500 crores. So 60% of what they bought in the first 6 trading sessions has been taken back. The domestic institutional investors, they've been taking our markets higher and to record highs over the last 2 years. They continue to do so. Their buying increases. In fact, on Jan 1, when they sold about 1,300 crores, we saw, or rather we thought that maybe these are signs of profit taking, but that's all that it was. From Jan 2 to Jan 11, they bought 2,000 crores, and in the last 3 sessions itself, they bought majority of that 2,000 crores. So watch out for that. We were watching out for the cues coming in from the earnings season. IndusInd TCS broadly in line with estimates. We'll watch out for TCS. Next week will be important from the results perspective. We have the big boys ITC, HUL, HDFC Bank and Kotak reporting their numbers. From the F&O cues though, some signs of caution coming in. FIIs resume selling in index futures. The Nifty futures premium has come off and the put call ratio at 1.75 is a multi-year high. So that is something that may worry a bit, but that's pretty much about it. All good so far.
Well, all good and kissing distance away of the 10,700 mark. Manglam, you did mention about TCS, IndusInd, etc. But what are the other stocks that will be in focus?
You'll be talking about TCS, of course. IT Pack will be in focus. TCS, of course, will be reacting to numbers today, and Infosys ahead of numbers. And that stock, again, like TCS, was at a fresh 52-week high, just ahead of numbers. Shree Cement, I remember Nigel telling us that maybe there is more to the company than just numbers this time, given the timing of the results. And yes, last evening they announced the UAE acquisition. 4 million tons of Union Cement, 4 million ton capacity of Union Cement in UAE for an EV of $305 million. Indiabulls Real Estate, they are looking to acquire some commercial space as well, and they have the target estimate annuity revenue to come about 1,450 crores by FY21. A lot of initiations in a lot of stocks by brokerages. Sun TV, Bank of America Merrill Lynch has initiated coverage with a 53% upside on Sun TV. They believe the discount with regards to the increased digitization is the big play. MAS Financial, Motilal Oswal has initiated coverage with a buy rating. They have a target of 740, rough 20% upside there. We got some results yesterday too. Syntex Plastics, a weak set of numbers. Revenues were down 7%, EBITDA was down 4%. 5 Paisa Capital, the one that listed very recently, saw a sharp surge in revenue from 1.8 crores to 5 crores, but the net losses continue for that company. IDFC Capital First, CNBC TV18 has been talking about this exclusively. Remember, Capital First has spoken to the exchanges. They haven't denied our story. Snowman Logistics, fund selling on the 4th day by Norwest Ventures, and Dredging Corp, finally, they've bagged some maintenance order worth 88 crore rupees. The government relaxed FDI, foreign direct investment rules, for Air India in its bid to find a buyer for the debt-ridden national carrier. The government opened the doors to foreign carriers to buy a piece of Air India. Earlier, foreign carriers were not allowed to own any shares of Air India. Now they can own up to 49%, provided they obtain the government's approval. Shireen Bhan spoke to the Minister of State for Civil Aviation, Jayant Sinha, on a host of issues concerning the national carrier's divestment process. Let's listen into that exclusive chat.
You have now, by way of that cabinet approval, allowed foreign direct investment up to 49%, but ownership and control 51% with an Indian entity. Is the government going to divest 100% stake? Will it be full privatization or not?
It will definitely be a strategic disinvestment, Shireen. The exact sale in terms of the share that will be offered as part of the disinvestment process and the stake that will be held by the government will be decided by the alternative mechanism that's headed up by the Honorable Finance Minister. But it is a strategic disinvestment, which means more than 51% will certainly be offered.
Okay, more than 51% will certainly be offered, but I would imagine that a final call, while it will be taken by the group of ministers on Air India headed by the Finance Minister, the thinking at this point, sir, you've had several meetings already. I'm not asking you to give us a sense of what the decision will finally be, but what is the thinking in terms of the government holding on to some residual stake?
I mean, there are various considerations that obviously come into play, Shireen, and you've seen that in the FDI decision as well, which is that we want this decision to continue to ensure that Air India remains an Indian carrier, that it remains a domestic carrier. It is controlled by Indian nationals and it retains its Indian ethos and character. And so all of that will be taken into account when the decision is made, first with respect to how much will be disinvested during the sale process, and secondly, how much of it will be offered for FDI. It can be up to 49%, but those are the decisions that the alternative mechanism will be making with respect to what we will be offering up to bidders as part of the disinvestment process.
Let me also ask you about one of the other considerations. You've got one unsolicited offer, and that's coming from India's Indigo Air. Airlines, sir. And there, very clearly, Indigo had stated that they would be up for the international operations as well as Air India Express. What is the thinking at this point in time in terms of either offering a single integrated network or, in fact, splitting up domestic operations and international operations?
There, I think we are quite clear, which is that we want to offer a single integrated network that includes both the international operations as well as the domestic operations. That is what will maximize the competitive position of Air India going forward, and that's really what I think we will offer as part of the sale process.
So you're very categorically stating that there will be no piecemeal sale of Air India. The domestic and the international operations will be on offer for sale together.
That is correct, Shireen. Of course, as far as the subsidiaries are concerned, we are going to be unbundling the subsidiaries, whether it's ground handling, whether it's the engineering business, the MRO business, Alliance Air. Those subsidiaries will be unbundled. You can bid for them separately, or you can bid for them in conjunction with your bid for the airline. So we will be offering quite a bit of flexibility as part of the bidding process when it comes to the subsidiaries. But when it comes to the network between the international and the domestic, as I said earlier, we want to put it out for bid as an integrated network.
So where would that leave then the unsolicited offer that Indigo has made, sir? And has there been any further communication with Indigo Airline? Because that was their stated interest. And also I would imagine that they would run into a competition commission hurdle if Air India were not to be sold piecemeal, because on the domestic side then Indigo's market share would go beyond the competition threshold, sir. So where does this then leave Indigo's interest in Air India?
Shireen, I really cannot comment on any of that kind of speculation. We have a very fair, transparent process, and we will have to see how the process unfolds and who places in what bids. But our process is set up in a very rigorous way in which the transaction advisor runs and operates the entire process, and we will just have to see how that unfolds. We really cannot speculate as to who's going to do what at this stage.
Okay, so that's Mr. Jayant Sinha categorically saying that they are not going to sell Air India on a piecemeal basis.